Ever wondered why everyone seems to be talking about cryptocurrency? It's become a buzzword, hasn't it? But what really is cryptocurrency? Well, let's break it down. Cryptocurrency, in its most basic form, is a digital or virtual form of currency. Now, you might be thinking, don't we already have that with online banking and credit cards? Yes and no. While those are digital forms of traditional currency, cryptocurrency is a whole new beast. It's not just digital, it's virtual. It's not a representation of money we have in a physical form. It exists solely in the digital realm. But what sets cryptocurrency apart is its use of cryptography for security. This means it's incredibly difficult to counterfeit or double spend. Imagine having a dollar bill that's impossible to forge. That's the level of security we're talking about here. And here's the kicker. Cryptocurrency is not controlled by any central authority. That's right, no government, no bank, no single institution has control over it. It's decentralized. This independence from traditional financial institutions is one of the key attractions for many users. Now, you've probably heard of Bitcoin. It's the most popular cryptocurrency and the one that started it all. Created in 2009 by an unknown person or group of people using the pseudonym Satoshi Nakamoto, Bitcoin introduced us to the concept of a decentralized, secure, digital currency. It opened up a world of possibilities and sparked a revolution. But Bitcoin is just the tip of the iceberg. There are thousands of other cryptocurrencies out there, each with its own unique features and uses. From Ethereum to Ripple, Litecoin to Cardano, the world of cryptocurrency is vast and continually evolving. So, if you thought cryptocurrency was just a trend, think again. This is a dynamic, complex, and fascinating world that's changing the way we think about money. And we're just getting started, so buckle up, because this ride is about to get interesting. Now you might be wondering, how does cryptocurrency work? Well, the magic lies in the technology behind it, known as blockchain. Imagine blockchain as a digital ledger, but unlike your traditional ledger that's stored in a single location, this one is decentralized, spread across numerous computers or nodes around the globe. Each of these nodes maintains an identical copy of this ledger, creating a robust system that's difficult to manipulate. Now let's say you want to make a transaction, maybe send some Bitcoin to a friend. This transaction isn't just recorded and forgotten, instead it's broadcasted to the entire network. And this is where the miners come in. No, we're not talking about folks with pickaxes digging for gold. In the world of cryptocurrency, miners are powerful computers that have a very important job. They verify transactions. They take the information from your transaction, along with a bunch of others, and solve complex mathematical problems. This process, known as proof of work, ensures that the transactions are legitimate. Once they've solved these problems, they add the group of transactions, or block, to the blockchain, hence the name, blockchain. But their work isn't done for free. Miners are rewarded with new cryptocurrency tokens, a process known as block reward. This is essentially how new cryptocurrency comes into existence. But it's worth noting that not all cryptocurrencies use this method. Some use a system called proof of stake, where the creator of a new block is chosen in a deterministic way, depending on its wealth, also defined as stake. Regardless of the method, the goal remains the same: to ensure that transactions are secure, transparent, and free from control of any central authority. It's this unique blend of technology and economics that makes cryptocurrencies like Bitcoin and Ethereum not just digital currencies, but also a potential revolution in how we think about and handle money. Pretty impressive, right? But that's not all there is to cryptocurrency. So, what makes cryptocurrency so popular and yet so controversial? Cryptocurrency, a digital or virtual form of currency, has been the talk of the town, captivating everyone from tech enthusiasts to financial analysts. But why? What's the big deal? First off, let's delve into the benefits. A key perk of cryptocurrency is its decentralization. Unlike traditional financial systems, cryptocurrencies operate on a network of computers spread across the globe. This decentralized nature means that no single entity has control over the entire network. It's like a democratic financial system where everyone gets a say. Another advantage is privacy. When you transact with cryptocurrencies, your identity remains anonymous. You're just a digital address on the network, which can be a boon for those who value their privacy or live in regions with restrictive financial systems. And then, there's the potential for high returns. Cryptocurrencies have been known to skyrocket in value over a short period. Remember the Bitcoin boom? That's the kind of financial roller coaster ride we're talking about. It's an adrenaline rush for some, a golden opportunity for others. But just like anything in life, cryptocurrency comes with its own set of perils. One of the biggest concerns is volatility. The value of cryptocurrencies can swing wildly in a matter of hours, making it a risky investment. Then, there's the lack of regulation. Without a central authority overseeing the operations, it's a bit like the Wild West of finance. This can lead to issues like fraud and financial manipulation. Lastly, the potential for misuse. The anonymity provided by cryptocurrencies can be exploited for illegal activities, such as money laundering or funding illicit activities. It's a dark side of this digital frontier that can't be overlooked. So, there you have it. Cryptocurrency. A new age financial system with a unique set of benefits and drawbacks. It's a thrilling world of opportunities, but also a realm of significant risks. As you tread this path, remember to be mindful of these factors. As you can see, it's a mixed bag of exciting opportunities and significant risks. Interested in diving into the world of cryptocurrency? Well, you're not alone. Every day, countless individuals worldwide are joining this digital revolution. But before you jump in, it's essential to understand how to navigate the cryptocurrency marketplace. The marketplace for cryptocurrencies is exciting, dynamic, and ever-evolving. It's not just about buying low and selling high, it's about understanding the mechanics of the market and making informed decisions. So how does one buy and sell cryptocurrencies? The answer lies in cryptocurrency exchanges. These are platforms that facilitate the buying, selling, and trading of various cryptocurrencies. Think of them as the Wall Street of the digital world. Popular exchanges like Binance and Coinbase are widely used due to their user-friendly interface and extensive list of supported cryptocurrencies. They operate much like traditional stock exchanges, but instead of trading stocks, you're trading digital assets. Registering on these exchanges is usually straightforward. You sign up, verify your identity, deposit funds, and voila, you're ready to start trading. It's that simple. But remember, while these platforms are secure, they're not invulnerable. Always ensure you're following best practices to protect your assets. And that brings us to the concept of wallets for storing cryptocurrencies. A wallet is essentially a digital safe where you keep your cryptocurrencies. There are two main types: hot wallets and cold wallets. Hot wallets are online and connected to the internet, making them convenient but vulnerable to hacking. Cold wallets, on the other hand, are offline storage devices. They're more secure, but less convenient. Your choice of wallet will depend on your needs and the level of security you desire. The cryptocurrency marketplace can seem overwhelming at first, but once you get the hang of it, it can be an exhilarating journey. It's a world that offers endless possibilities and opportunities, but like any investment, it comes with its own set of risks. So here's a word of caution as you embark on your cryptocurrency journey. Remember, with great power comes great responsibility. Be informed, be cautious, and most importantly, be ready for a wild ride. So, what does the future hold for cryptocurrency? An intriguing question indeed. As we march ahead into a digital era, the influence of cryptocurrency seems to be growing exponentially. Big names like Tesla have already started accepting Bitcoin, giving it a stamp of approval and a huge boost in credibility. This is just the tip of the iceberg, as more and more major corporations are recognizing the potential of cryptocurrency, paving the way for a wider acceptance and legitimization. Cryptocurrencies, with their decentralized nature, have the potential to disrupt traditional financial systems. They could redefine our understanding of money, providing a digital alternative that transcends borders and conventional banking. Imagine a world where financial transactions are swift, seamless, and secure, unhampered by geographical boundaries or banking hours. This could very well be the future that cryptocurrencies promise. But it's not all smooth sailing. With this new financial landscape comes new challenges. Regulation, or the lack thereof, is a major hurdle. Governments around the world are grappling with how to regulate cryptocurrencies. They are caught in a delicate balancing act, trying to prevent illicit activities like money laundering and fraud, while not stifling innovation and economic progress. These regulatory uncertainties pose a significant risk to the future growth of cryptocurrencies. And let's not forget the volatility. Cryptocurrency prices can swing wildly, and while this can lead to huge gains, it can also result in massive losses. This volatility, coupled with the fact that the crypto market is still in its infancy, means that the road ahead is likely to be bumpy. In the end, the future of cryptocurrency is still unwritten. It's a thrilling narrative of innovation and disruption, interwoven with challenges and uncertainties. It's a story that's still being written, and we are all part of it. Whether you're a fan or a skeptic, one thing is clear: cryptocurrency is here to stay. So, keep your eyes peeled and your minds open as we navigate this exciting new frontier. The future is not only digital, it might just be cryptographic.